Good evening, everyone. This is Rennie Jacques with tonight's free video. First thing I want to talk about is the importance of those daily support and resistance levels. We got a couple great examples of that today. First is in the Russell. We can see yesterday we had that strong move down and we stopped right at that support level of the 35 period channel and that 50 period moving average. And today we can see it made a doji star as it couldn't break through that support level. So it's very important that we know where these levels are at all times on these daily charts, because the intraday charts are going to be based on getting through these daily support levels. And we can see other examples of that in the other stock index futures. Over in the S&P, we can see that today the S&P came right down to that 35 period moving average and stopped right there. So if one was taking short positions as we were moving down and wasn't aware of that support level, there's a very good chance of being stopped out. We can see that also in the Dow as well, coming right down to the bottom of that 35 period channel, and also in the NASDAQ as it's coming right down to that 20 period moving average. And we can see again that those daily support and resistance levels are very critical for us to know with our intraday trading. Now, with all these moves that we've been getting in the market, a lot of people have been asking me also about potentially taking longer term positions in some of these stock indexes. Now, a lot of people don't necessarily like to take long-term positions in futures. So for instance, on a spike down on the NASDAQ looking for that bounce, a lot of people don't necessarily want to trade the future on that as they're not necessarily comfortable with the risk. Well, fortunately, there are ETFs that will allow us to do this. Now, many people know the standard popular ETFs, which for the NASDAQ is the Q, symbol QQQ. For the S&P, it's the SPY, SPY. And for the Russell, it's IWM. But there are also inverse funds and leverage funds as well that we can use for our trading. So for instance, for the NASDAQ to take short positions, one could buy the QID, which is the ultra short Qs fund. So that moves in inverse to the NASDAQ, as we can see here. As the NASDAQ has been moving up, QID has been moving down. Now we can see the NASDAQ here made a speed line to 20 trade. Well, over here, QID made a speed line to 20 trade in the opposite direction. So that's one way that you can play these by using an ETF instead of the underlying future contract itself. Additionally, one could then use options trades with those ETFs to give themselves a higher probability even still on those trades. One thing to keep in mind when trading options on some of these ETFs is you want to make sure that there's liquidity there, and also on a lot of leveraged ETFs, the capital requirement tends to be higher than on just a standard ETF. So something you want to keep in mind and look at when you're making those trades. Hope everyone has enjoyed tonight's video and look forward to seeing everyone soon. Take care, everyone.